Oh, baby, this Alibaba. Oh, Alibaba. We have gone in waves with this. We have always stayed true to our thought process, Paul, is find great companies, look at the numbers, and if they agree with where we think we want to buy, we're buying. We're doing this way. I'm surprised. Actually, it's been so many no's for so many years on so many companies. We get chastised in the comments that we never buy anything. But sure enough, we've done videos where we're buying HP. We love Intel. We're back in love, and we're in love with Baba. You had your doubts. I had my doubts. We all read this book. We fell in love with Manish Pabrai, learned about his thoughts. Sven Carlin is doing more videos on Baba. More value investors are falling in love with this company. So we did some videos a couple weeks ago, Paul, where we're buying.
Why are value investors falling in love with the company? Because the price is going down, and the prospects are better than the price dropping happening. You know what I mean?
So today's date is August. I have no clue.
19.
Today is August 19th. I love it. Baba has fallen another 6% today, down to 162. We were buying at 190, and we felt great about it. Why do we feel even better, Paul?
First off, follow Mo and I on Instagram. We're trying to get our blue check marks. Check, please. Alibaba. The only concern about Alibaba, if you go back to past videos, my concern about any Chinese stock was China. The accuracy of information. Now, I don't believe in, even though I like some value investors, I don't believe in mimicking them all the time. I come up with my own valuation for companies. But what I did like, what I heard from essentially Charlie Munger, Sven Carlin, Manish Pabrai is they trusted the numbers coming out of Alibaba. The second I heard those three guys trust the numbers, I was like, okay, if these guys trust the numbers, I believe in them, especially Charlie Munger. So I'm okay with this. So once I heard that, I was like, I'm in on Baba. Now remember, I'm not all in. I started a position, I sold puts, and I'm going to add as time goes on to build up my position at dollar cost average on the way down. That's risky because at first I bought it at 184 and Alibaba skyrocketed to
213, something like that.
Something like that. It went to like 210. I was like, oh shit, I'm not going to get more shares. Mm-hmm. Now it's falling to 162. So this is our new software. It's being updated. This is the beta version. So it has yesterday's stock price at 172, but currently it's at 162. The market cap has fallen. It should be right now it should be around $440 billion.
Yeah, 438, yeah. Wow.
So PE of 20 and a 5-year PE of 28.4, which is now about 27. Profit margin of 19.3%. Look at this, guys. Return on invested capital over 5 years of 10%. Last year, they're at 18.8%. So these are this is one check mark here, but the 5-year PE is still higher. We want a 5-year PE below 22.5. However, the growth potential in Baba is much higher than other companies. And growth is a very big factor when it comes to value investing. If a company is going to grow at a higher rate, then you should be willing to pay a higher price for faster growth. That's an absolute fundamental belief in value investing. So when people tell me I don't understand growth, I do understand growth. What I don't understand is overpaying for growth. Mm-hmm. That's a very key difference between value investing and stupid investing.
It's not what you buy, it's what you pay.
Correct. So look at the income statement, Uncle Seth. Look at these guys' revenue over the last 5 years.
So let me put it in this sense, Paul. As a new investor, I might be saying the stock is down. This company must be doing terribly.
Yep, that's because you know what you're thinking? It's logical if you believe that when the stock is up, the company must be doing great. Yep. But all you're doing is following the stock price. I look at the company and go 27 billion to 119 billion. That's pretty awesome. Look at net income.
I assume it's down because the stock's falling, Paul.
It is not. It's tripled. 7.86 to 23 billion.
Okay.
This is
shares outstanding, slightly up. I don't like dilution, but 2.54 to 2.72, not a ton. No. So I'm willing to overlook that, and we'll show you our stock analyzer tool after Mo does his charts to show you what we pay for the stock and why I'm a buyer. Now, what we're looking at here on the balance sheet, they have 100 billion in current assets and only 93 billion in current liabilities. So they have enough cash on hand to pay off all their liabilities. But here's the key. 36 billion in total long-term liabilities. Their cash flow average over the last 5 years have been 17.8. So in 2 years, they can pay off basically all their long-term debt. That's pretty effing solid.
And we generally like to see under 5.
We want to see under 5, correct. So let's go to annual, where it's a lot better. This annual shows exactly 2 to 1. And last year's free cash flow was 29 billion. Look at this growth, Seth. 10 billion to 20. It's tripled its free cash flow in the last 5 years. It has tripled its free cash flow in the last 5 years. Where was the stock 5 years ago? Was it even public 5 years ago? Yeah, it was at $100 a share. Now it's at 172. So it's up 70%, even though cash flow has tripled.
Yep.
It's up 60% now, even though cash flow has tripled and it's up 60%. Now, it was probably overpriced back then, but the whole point is I'm looking at these things saying, okay, this is adding up to something that I'm feeling very comfortable with.
This is a great example that company and stock price are not the same thing.
Correct.
This is a perfect example of that.
Mo, Paul, if you go back to the ticker price under metrics there on our software, I think around, go back to the 5-year. See this peak right here to your right? I think right here, much like our Tesla fanboys, is we were probably hearing the amazing growth they're going to have, how China is an emerging market, how this massive train could never stop. It's just going to keep going and going and going. And all of a sudden, they did all that, and the stock price fell. I think
it fell how much? It's almost half right now. And this is only 10 months ago, guys. If I told you 10 months ago this stock will be falling in half, what would you have said to me?
I'm sure you told us.
You're crazy. I don't know if I said in half. You're crazy. Look at the 8 pillars here, guys.
So I try to explain to people that even if a company still goes to the moon, the stock price can crash. And this is really one of the anomalies that a value investor looks for.
And I always tell people, look at the .com level. Look at Intel and Cisco in the .com. The companies are making 3 or 4 times more money from 2000 and now, and their stocks haven't recovered to 2000 price. They're still below their 2000 peak. How is that possible if all it takes is price going up? Because you overpaid back then for that profit. You overpaid for that growth. That's it. The 8 pillars here. Valuation. Most people would say, avoid. But people look at me and say, you're going to avoid it. Shares outstanding is a problem. So, Mo, why don't you do the chart, and I will enter the stock analyzer tool information.
If you're interested about trading Baba at a faster pace, you can join the Bidnass Nation in our Patreon and join Mo on a day-to-day basis where he informs you about trades and all the people who are talking trades. Go ahead, Mo. Are people trading Baba? I'm sure they are.
They are. But the thing that I want to zoom in on is 161. That's the next support level. So that's down here. Let's see if I can draw an accurate straight line.
People love your lines. That one's not too good.
That one wasn't very good. But anyways, there is a 161 level in there, and it's 162.27 right now. So after that, people have told me that the next level is 150, that's support. So let's see. I mean, I'm not really, you can't really do anything on here. Let's just look at the daily chart, see if we can do something. So you can absolutely short this on a scale right now because you are getting enough volume in. You're really on the bottom here. I mean, with all the news that's coming out from China about the regulations, the uncertainty, this may be a great stock for you to swing trade, but personally, I think it's way better from a value standpoint.
From an outside perspective, Paul, it looks like that you've been waiting and waiting to buy things for years, and now you finally bought Baba, and now it's going down. This is not what we want to happen. We want a stock to go up. So as a new person might be saying, well, what a moron. This guy's buying and loving it going down. What do you say to that?
When you go buy things at the store, do you like it when they're on sale or not on sale?
Well, not after I buy them, I guess, but...
True. You get a little bummed if you're like, hey, I just bought that car and they just put a $5,000 rebate on it. Well, but do you sit there and like cower up and get scared and go, what am I going to do? No, you sit there and say, oh, that sucks. Okay. Stock analyzer tool. Guys, this is part of our software. It's included in our software. There'll be a short video at the end in the middle of this that you probably already saw explaining our software. Now, guys, revenue growth. Seth, what's this revenue growth number over the last 5 years?
Wow, 44%.
I'm going conservative. 15% revenue growth, 20% and 25% over the next 7 years. I'm going much lower. A 66% drop right here. Share change. Increasing shares by 1%, 0.5%, keep it the same. Profit margin. I'm going lower than this 18-20-22 on the free cash flow as a percentage of revenue. Metric, PE. Guys, the current PE is 28. I'm going 14, 16, 18. Same with free cash flow, 14, 16, 18. I'm looking for returns of 15, 12.5, and 10. Analyze button. The stock is currently at 162 because, like I said, this isn't updated.
Yes.
Seth, you ready for this?
Let's see. Look at that.
Guys, it's almost at the low end of my value.
This has never happened on the show.
And I'm assuming only 15% revenue growth in that low end. It did 45% of the year for the last 5 years. So I'm having it drop by 66% of its revenue growth. So as long as you believe the numbers coming out of Alibaba, which I do based on the other value investors that I respect, I think this is a no-brainer. I'm going to buy all the way down. And I'm really glad we did this because it even reaffirms to me, whenever a stock goes down, you should still reassess and say, Mo asked me today, what did we miss? I go, I don't know. And we're going to keep looking at things and I don't think we missed something, but we're going to keep looking.
I personally think that all of this fall is due to irrational fear based on these new regulations coming out of China. And they're all exploratory.
What are the regulations coming out of China?
Exploratory. They're saying that they're going to So Alibaba was given some kind of incentive. They give these to all new Chinese companies, internet companies, incentive to get bigger. And now Alibaba is at the point where they're taking away that incentive. So they're going to tax them a little bit more. And I don't know what other kind of regulations they're throwing
Is there
around.
potential for delisting?
There's potential delisting from the United States. So that's another concern. But to me, I just look at this as maybe the irrational fear that people are afraid of things. So for those of you that think that we create fear, uncertainty, and doubt, we're not doing that right now.
We're doing the opposite
We're
here.
doing the opposite of that right now. So it's not that we create that. We maybe create that on stupid companies that don't make no sense. But for good companies, we tell you to buy it or we buy it.
Paul, in our last video, you wrote over 200 grand of puts on Baba all the way down to $100. Are you still putting options on this puppy?
Yeah, and I'm actually buying more shares. But let me go to revenue growth numbers, and let's change this a little bit. Let's go 20, 25, and 30. How does it change the numbers? All day.
All day it's a green.
All day. Almost a $700 valuation on the high side.
Yeah.
And I don't think that 30% revenue growth in the next 7 years is an unreasonable revenue growth number. I don't think it's crazy. I think it's less likely to occur, of course. Maybe it's 10 or 20% chance. But in all investing, it's all about analyzing what are the probabilities of things happening. That's why we encourage people to be conservative and put in lower numbers. Let's go 10, 15, and 20%. Okay, it's still selling for below the mid number, right? I'm still a buyer of Alibaba. Call me crazy. Tell me I'm missing it. But you also said the same people who tell me I'm missing the report now are probably the same people who said I was missing this here.
Yes.
And Paul, even if they get delisted, they're going to the OTC.
Did you say Nicole?
Paul?
Oh, I thought I heard Nicole. Did you hear Nicole?
I did not, but your name is Paul last time I checked. Paul, it is Paul, right? I'm looking at Baidu. I mean, not to open up a can of worms, Paul. Baidu was $207 on June 29th. It's now $136. I mean,
Seth, I really like that you brought up Baidu and Tencent because they're all doing the same thing, which gives me more reason to think that it's the regulation because all of the Chinese stocks are starting to slide. It's not just Alibaba.
Isn't that incredible?
That gives me a little more comfort.
Folks, we
340 down to 137.
We film these videos live, so sometimes I just say things, but I was like, Paul, it's like, how does this compare to another Chinese company that people are also in love with? Look at this thing. I mean, so does this, Mo, that actually reassures you that's not just Baba, but does all of this more scare you about the China regulations?
No, it really doesn't because, Seth, think about it. These are really great companies. I liken Alibaba to Amazon. Do you think for a second, if the United States put stringent regulations on Amazon, they're not smart enough to figure it out and figure out how to work? Come on. Alibaba's going to do the same thing.
I guess what I'm confused about, Mo, is why. So China tends to prop itself up like over exaggerate. So why would they be hindering their own companies so much, Paul?
I don't know. That's a good question.
Why would they want it? Wouldn't right? These are the ones that.
Why
would they not want to prop it up and do really well?
Well, they had a thing against Jack Ma for a while. Remember there was like allegations that he'd been kidnapped and murdered and killed. Jack Ma, the founder of Alibaba, but he popped up finally after like months of being gone. I don't know, guys, and this is always a concern about investing abroad.
100%.
Is, everybody feels more comfortable investing in their own country, but I feel more comfortable because of Charlie Munger saying, yep, I like this company and I'm increasing my shares.
Yeah, that's our take. Actually, Paul, I just pulled up Momo as well. Over $17 down to 11.
There you go.
It's happening with a lot of these. So
it's Chinese stocks wide. So
stay tuned. We still love this stock. We may look foolish at the moment, but our goal is to look incredibly knowledgeable.
I would love to be able to buy all the way down, and my average is $150 a share on Alibaba. That would be awesome.
And for the record, we're not trying to make what Paul just said. Let's say $500 to $700 a share, depending. We're not trying to make that by the end of 2021.
No,
this is a 3, 4, 5 year play that we're doing right here.
Yep.
That's our take on Baba. Follow along. Join the Patreon. We're giving away a Tesla. Fondle, thumbs up. And we'll see you next video. Thanks for watching.